There's a shift going on, and the world is playing catch up, and a lot of people are being asleep at the wheel, right? Because you always took it for granted, right? The other thought process was that we're all codependent. China needs us as much as we need them, and China's showing, I don't need you as much as you think I need you. It's really an arms race.
Ian Harris joins us, CEO of Copper Giant. We're back with him at the Vancouver Resource Investment Conference. Last time we spoke, Ian, a couple months ago, gold was not at $5,000, silver was not at $100, and copper, your primary asset of interest, was not at $6 a pound. Lots has changed in not just a year, but a couple of months. So welcome back, and let's just continue the conversation we were having offline. Last year was a great market for the metals as well. It was an all-time high for gold, all-time highs for copper, right? Silver was just on the cusp of breaking out. It wasn't like 2024 was a bad year. It wasn't like 2025 the start was a bad year. But fast forward 1 year, you got a completely different crowd at the VRIC, which is a good sentiment gauge on its own. Why do you think that is?
So first of all, I'm almost, from our first conversations, we met together for the first time here in Vancouver. We obviously did the interview last year at VRIC, and I had to go a whole bunch more aisles to get to you, and had been a whole lot more busy since those last conversations. And so we have to separate the equity space and the commodity space. There's been real strength in the commodity side. We've seen strong performance in gold, silver, copper during that time period, but it hadn't rolled over yet into the equity side. We saw it, and most bulls are driven by gold. We've seen a rotation to silver, rotation into copper, but also at the same, the rotations get softer each time because it seems like there's new money coming in. And one of my favorite antidotes, right? Rick Rule, in a recent interview, said, I sold all of my physical silver. First, he made it clear that I invest in silver as a speculative investment. So it's not a storage of wealth like gold. But why did he sell all his silver? Because he said the commodity has gone up and the miners haven't responded. And now it's time to rotate from a commodity to an equity. So he sees stronger performance in a silver miner than he would in his physical silver. And so these are things that people are learning, right? I saw a lot of anxiety today at the booth. People going, I missed out. Oh, is it too late? Because there's a lot of new people coming into seeing how can I make an investment in the metal space? I've already missed it, right? The nice thing about these super cycles is, and those that have seen it, they go on for a decade, right? So it's very, 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 very exciting times. It's massive, the change between a year ago and today, especially on the equity side.
If a portion of the retail crowd missed the run, that tells me it wasn't the retail crowd that drove the price of the stocks up last year. Who was it? The pension funds, the institutions, the hedge funds? Who was it?
So I remember even the way that we present in the past, it was for a sophisticated investor. It felt like it was a small pool of capital. And even if it's retail, it was really very sophisticated high net worths is really who you're looking for. There was a little bit of retail, but you can definitely feel there's real retail money. People are looking at it. I can see it from our website hits, right? We can see that we've gone to 80% of our hits. The amount of traffic coming to the webpage is like, for example, out of the United States. So you're seeing a return to that. Now, when the taxi driver is telling me what mining stocks to buy, then I know we're at the end of the market, right? But it's still like the beginning of it. But there's definitely fresh money coming into the sector. And at the same time, you have large funds, where in the past it was a very small niche group of who truly invests, or hedge funds, and starting to see a rotation from the funds that are now looking to get in, how to participate on the mining side. So it is without a doubt the start of a new secular bull in the metal space.
People can attribute all sorts of narratives to why the metals have gone up. Gold, you can say monetary debasement, uncertainty about global geopolitical conditions, dollar debasement, all sorts of things. Central bank buying. Silver, we can talk about the shortage, industrial demand, and China's recent export limitations. What's the story for copper? Why is copper? Copper doesn't make headlines as much as maybe gold or silver on the mainstream news, but $6 a pound, unprecedented. What happened?
I would argue that copper has been in the mainstream media much longer than the gold and the silver space, right? So the narrative always has been there. There just hasn't been the response on the equity or even the commodity side, right? And we've actually had these conversations looking at the charts of copper that, traders drive copper price, right? And their perspective is not the same as, do not confuse copper price of what is needed to provide the copper that the world needs, right? So while from discovery in order to production, it can be 20 years, a trader isn't worried about if I don't have copper in 5 years. And so as that length of vision becomes longer, it's normally driven by people who are worried about, how do I supply the copper I need to build the houses that I need? How much do I have to stock? And I'm worried about actually having enough copper in order to do my industrial process. So I would argue that silver is acting a whole lot more like copper, even though we're applying an old narrative to it. We haven't seen the investment in silver to date as it was historically created the squeezes in the past. It's been driven by industrial. And even China limiting exports of silver is not driven because they're being jerks. It's not because of political reason. It's because they need to say, wait a second, in the past, we put in all the facilities, we had an excess of it, so we would sell the excess. But now I need it. And so I can't sell to the rest of the planet if my own industries need it. China understands production chains, and they're not going to sacrifice their own national production chains in order to supply the excess or what the rest of the world needs. So silver's acting a whole lot more like copper. The difference is it's a much smaller market, so it responds quicker. So the same would argue, how could copper go to $6? There was a little bit of a pullback, and inventories have never been higher than ever. It's because people are saying the inventory is irrelevant because I'm still worried how I'm going to be supplying and providing and having copper even in a year perspective.
And also the fact that China refines most of the world's copper. I think it's over 60%. Maybe the fact that copper is above $6 signals a complete breakdown of the supply chain between China and the U.S. or perhaps worsening. Maybe that's what it is.
Yeah, it's more that people said in the past, I could just say how worst case, I'll just pick up on the spot. And now people are worried that there isn't enough copper, and they're worried about physical constraints, where the vision is much more longer term in copper, right? You look at some of the other metals, and it's in niche little industries, but copper covers. If there's light bulbs, there's copper. I mean, it's as simple as that. So it impacts. It has such a much larger impact on the overall world economies that their vision is a little bit more into the future. So despite inventories being up, which relatively isn't that long ahead, and LME had 1 billion ounces of silver at one time. That's a year's worth of production. So 100,000 tons of copper sitting in the LME is insignificant in terms of what the world demand of 20 million tons per year is. And it's a couple of weeks. So inventory is not the best indicator of what direction copper price is. It's really what people are worried about securing their supply.
When you look at how the other commodities perform, silver and gold, we talked about, palladium, platinum are also starting to tick up dramatically over the last couple of months, ever since May 2025. And maybe there's a larger super cycle in commodities that's happening now that's lifting all boats. Does that make sense?
Yeah, it's a cycle for a reason, right? If it takes 20 years to build a mine, but prices are only vision is 6 months ahead of yourselves, then when people start worrying about things, it takes a very long time in order to incentivize more supply. And you would argue in the past there was more levers that could be. You could take brownfields projects and increase their production, et cetera, et cetera. And especially in copper, there really has been an underinvestment for 20 years into the development of new projects. And so this time, people are hitting the dial and nothing's happening. And so it is playing out. It's the same narrative over and over and over again, right? Permitting's difficult. Political risk is difficult. All these different reasons. It's more and more work in order to get a new project up and running. It was a lot easier just to expand an existing project, lower the grades, add a little bit more capacity, but the cupboard's dry. And so it's playing over, that tune is playing over and over and over again in many, many, many different metals. So now it's time to pay the piper. The other reminder I have for most people is, for copper is a great example. Absolutely no one on the planet is interested in copper price going up except for copper miners and copper investors.
That's not true. I care.
You care but you're connected to as on the investor space.
Sure.
Right? So politicians go, it's like the price of oil. Nobody wants the price of gasoline to go up because it affects voters, right? Nobody, except for a petroleum company, is interested in the price going up. And what does that lead to? It leads to a shorter, not on my watch. Like, as long as we can hold the price down for a few more years, yes, we're going to create a train wreck, but nobody cares about the train wreck into the future. And that is playing out.
So many people are here happy about the way the commodities have played out. And, and that's understandable. I'm happy for them. But I'm concerned about what this means for inflation. And all these people celebrating copper at $6 or silver at $100. Silver is in your phone. Silver is in the solar panel. Silver is in your car if you have an electric vehicle. These things are going to get cheaper.
Yeah, I'm more concerned in what it means, because the reason that China, who has built their production chains and has supplied the world with these metals, because they have put in the investment necessary in order to smelt and refine them, but with a vision of supplying their own industries, and the excess, everybody just thought, I'd always be able to get it. But now that there's a lack of these materials, they are reducing or restricting or eliminating any sort of export, means that they themselves are having problems sourcing the metals that they need, and the whole world is waking up to it. And so it's getting very interesting, and I think that is much. For example, if you believe that AI is the way the world is going towards the future, and it's really a race, it's really an arms race, right? And I used to explain it as being like an arms race. It really is an arms race because of its so much importance in defense. Yeah. You can see the drones going on in Ukraine, and then you see an article coming out just, I think, a couple of days ago. Elon Musk goes, soon we'll be producing more chips than there is energy to power them. Right. So it is a struggle of what it means of what's happening in the world, right? There's a shift going on, and the world is playing catch up, and a lot of people are being asleep at the wheel, right? Because you always took it for granted, right? I eat a ham sandwich. Where do you get a ham sandwich? It comes out of my refrigerator. But nobody thinks about what it takes to make a ham sandwich, right? It's just you always take it for granted that the copper and the silver and the gold and the tungsten and the nickel and all these other metals would always be available to make your widget. And now they're realizing, in order to make that widget, I need to worry about the supply chain. And so it has much more profound than even just inflation. So obviously, to incentivize the creation of new production chains, you need higher prices in order to incentivize them, right? But on the, you look at silver price, it's only 10% of a solar panel, so it's not that big of a deal. Yeah. There's a lot more cost goes. I don't think it will directly relate as much as even petroleum or oil prices do into what happens to consumers. But it's really a question of, we have always assumed we could produce more for cheaper, and now you're not going to be able to produce as much, and that drives price. So it has some very profound impacts on the average person, right? That we haven't had to worry about. You never had to worry about where your ham sandwich came from. You never had to worry about those kind of things, and now you're actually going to have to worry about it.
I wonder how this might affect monetary policy from the Federal Reserve and other central banks around the world. If commodities continue to go up, and that eventually feeds into the supply chain, your ham sandwich is going to get more expensive. So, we're here celebrating the prices going up, but maybe interest rates won't go down as much as people expected this year. What do you think?
Yeah, I do not have that answer, but obviously, it always depends on what is I call it the wolf closest to the fire theory. Yeah. We're all sitting around a campfire. We hear wolves calling, but we only worry about the wolf that is closest to the fire. The world is filled with problems right now, and it's going to get very interesting how that all plays out. So you're right. Yeah. We're celebrating, but the larger impact, especially people that understand the gold side, which is really the leverage to the security of wealth, those that didn't do that, what does that mean for the average person?
So speaking of things that didn't go well, or maybe things that did go well, so after Maduro's capture in Venezuela, pretty much the same week Trump announced that he was looking at Colombia as the next target. He made that threat pretty clear. And then I think he had a meeting with the Colombian president, so that never happened. But immediately when he made that announcement, or when he made those remarks on TV, as somebody operating in Colombia, what was your initial reaction?
So we've talked about this a lot, that the world is coming to be more concerned about production chains. And so the United States, and you could argue that many people have been asleep at the wheel, not worried about it because it didn't happen during their 4 or 8 years, so they wouldn't have to worry about that problem, right? Of the whole issue of that the warehouse of the planet has been China, and it was always going to be available anytime you wanted to pick up and ask to make sure that you could develop your widget. And the world is realizing that that's not necessarily true. The other thought process was that we're all codependent. China needs us as much as we need them, and China is showing, I don't need you as much as you think I need you, is what's happening. So we talked about United States need to re-secure and develop those supply chains again. And we've maybe even over a year ago, we talked about the breakup of the globalization of the planet.
Yeah.
And as globalization, which really makes us, it's the ham sandwich conversation, makes a lot of sense. We don't worry about where the ham comes from, but I really like ham sandwiches, and now I'm worried about where I get my ham from. You have to really think about what it takes to be able to make that. The world, that I think sort of like Venezuela was, we let you go where you went for the longest period of time, but you're in my hemisphere. This is my territory. Everybody's marking their territory within the sandbox. And that was the way I took it. So it was Venezuela, and then the next thing you know, looking at Colombia. And people that know the map, those are the 2 South American countries closest to the United States.
What do you think what happened in Venezuela? Do you think it has any impact on Colombia's election coming up? And would that have any impact on the businesses operating in Colombia?
I think it has a large impact on the decisions that individual politicians are making on what they are going to do once, not necessarily what they say upon, but how the behavior, absolutely. And especially that the world response was mute, right? So it was sort of like, well, in Maduro and in Colombia's case, maybe beat up the guy you know is not going to be in office to send a message to the next guy. And I think that has a profound impact on behavior, on what's going. But it also creates the opportunity, right? I even saw shareholder, I was worried that the share price was going to go down with all this conflict, when really I was much more bullish, because I'm a believer in it, right? The supply chains will be remade. Colombia is a major non-NATO of the United States, and I don't think it was the only issue. There's a mix of issues, but it's a part of the equation in decision-making that Colombia, we are going to work together in order to provide secure supply chains. Friendshoring, I think, wasn't even a term we used together in conversations for a long time. We are going to friendshore to make sure that, really becomes a block of redeveloping the supply chain.
What does less globalization mean practically for the copper market? And by the way, less globalization was a major theme of the WEF, World Economic Forum at Davos this past week, when Mark Carney, Prime Minister of Canada, even said that globalization was weaponized many times, people imposing tariffs on each other. We need to move away from that. Less globalization is a new world order, he implied. What does that mean for copper?
Well, I think that's a terrible term to say tariffs are a part of globalization, because it's exactly the opposite of it, right? And globalization, when you think about globalization, was a factor of de-risking, right? If I have to build a mine, it's risky. If I have to build a mine and a smelter, it's more risk, right? Because you have more components within the financial that you need all of them to work in order for something to be functional. And globalization basically said, I can focus on my widget and not have to worry about where the rest comes from. You could argue that there's other parts of that conversation, but from a supply chain perspective, right? I need to build a widget. I don't care where I get the parts from. right? If I want to build an iPhone for the United States market, it doesn't matter how I build the components, where it's put together, et cetera, et cetera. It is just all done. And globalization is great because you go to the places that are cheapest to make those individual components. The weakness, obviously, we're seeing it when the entrance into that supply chain is put at risk, then it affects your ability to make widgets. If you want to make an electric vehicle and you need an electric motor, and that electric motor has copper and there's no copper, right? Those furthest from the supply chain get cut first, especially when there's national interests involved. So when China goes, I don't have enough copper, I'm going to make sure my copper goes into the fabrication of Chinese-made electric vehicles. I'm sorry, Tesla. Right, that's where it becomes an issue, and that has been why the decoupling of globalization is going on. People are now going to be worried about things that they've never had to worry about in such a long period of time.
I have one more question on geopolitics, then I'll move on to actually Copper Giant and your new developments. Trump was very transparent in taking Venezuela for oil. In fact, he didn't even try to sugarcoat it with some higher moral cost. He just said, we want to sell their oil. Okay, I guess, fine, fair enough. I mean, he could make the same argument about taking Colombia or any other country for their resources, Peru for silver, Colombia for copper, or whatever other natural resources are in the ground. I mean, is that next?
Well, I think that it's an oversimplification even to say that Venezuela was about oil, right? I think that most decisions are made based on a complex list of multiple factors of why to do something or not. You know, it's a cost-benefit analysis, and oh yeah, it's got some oil. That's okay, done. Like the decision is made when you're going through that we need that oil. Maybe that was the major reason, et cetera, for Venezuela. Maybe it was because I think emotionally drugs are a big issue for Trump, right? You know, this is a guy who's never drank a drop of alcohol in his entire life. So those things have an emotional response to him. So in terms of Colombia, there's, you know, resources are a component, but I think the other drivers are, right? I think that Trump truly believes the problem of created by drugs is a big reason, but I think the bigger reason is you're my hemisphere. Yeah, we have let you go rogue for too long, right? You're making friends with the wrong people, but you're in my backyard. And I think another probably more poignant is Russia. You took Ukraine, right? Because you said that's my backyard, right? I'll let you get away with that. That's my way out, right? Because I'm going to let you do, but Venezuela is my backyard. Yeah, that's and I think it has more to do with areas of influence and resources, not just I don't like you and I want your zinc. Right. It's a part of the equation, but I don't think it's the only equation.
So now that your Copper Giant stock is up to, I think, 60-something cents?
68 on Friday.
68, and exactly 1 year ago is, let me just get it, 20 cents. Yeah, about 27.5. Bottomed around 17 cents just in August. And in the span of less than 6 months, you went from 17 cents to 68 cents. Very quickly. Very dramatic.
I'm glad I didn't make you look bad for doing all these interviews with me and then not being able to deliver. So I'm happy that we're finally delivering on a narrative that's been consistent for a long period of time. It's just sort of like the world's waking up and actually it's going the right direction.
Good on you guys, the audience, for paying attention to my show, because Ian's been calling this for years. So congrats again. Ian, what are you going to do now that you're up basically 4x since six months ago?
Before I even say that, right? I see a lot of FOMO in today. I've seen a lot of people show up to the booth. They see the movement. They're like, oh, I thought I was going to buy it. I see people taking some selfies every so often. But it's really, there's a fear like I missed, right? We saw the gold, it rotated silver, and now it's a little bit rotating to copper. But I would like to convince everyone that these are super cycles will go on 10 years, right? That while there's intermittent bears and bulls within that cycle, right, the overall trajectory will continue to go up. So it's not a waste of time to understand the equity space, right? I think early investment now and knowledge will go a very long ways, especially in copper because it's a little bit more consistent. It's just kind of like the little engine that could, right? I saw a Friedland presentation, even to maintain a 3% GDP increase just for existing electrification. Forget AI, forget electric vehicles, forget energy transit, forget all this other stuff, right? We need to mine more copper in the next 25 years than we've mined in the history of mankind. It's unbelievable, right? So, but copper is just worthwhile to understand in a little bit more detail because it will pay off over this next 10 years. It's going to, if you said, I wish I would have understood Bitcoin 10 years ago, it's kind of a similar stage. So we went through a lot as a company, and I felt like we deliver, and then kind of everything came together, and you're getting repriced a lot of work that was done in the past, a little bit of catch up. So we put out a 1 billion ton resource, true tier 1 classification as an asset.
When was that exactly?
When did we put that out? Actually, that's a good question.
A couple months ago, right?
I think October.
Okay, so it was at the start of this huge rally. I just wanted to know if there were some company specific events.
I think it was the big catalyst.
Yeah.
It was the thing that kind of broke the dam.
Sure.
There was multiple things going on. There was a little bit of tailwind in copper. We put out this big resource, and it really changes you to a tier 1 type asset. We delivered on the work that we've been doing for 12 months. Frank Giustra, obviously, we wouldn't even be here today if it wasn't for his belief in the project. From the beginning, he started buying in market with a clear, people say, why wouldn't you just do a financing so we could put that money into the company? Because our valuation literally was our biggest problem we were facing. Mm-hmm. We understood that we have to, get this rated to where it's supposed to be. A lot has gone on, and then so the next big steps is we have elections in Colombia in May, which will be an important catalyst for the company. I think all of Colombia is doing well with the understanding of where things are going in elections. And our next big step is to go from resource to the first initial economic studies to say, this is what the conceptual economics could look like. It's called a preliminary economic assessment we would like to get done this year.
Yeah.
So we have now 2 drills running. We'll be increasing the number of drills, more meters, more consistent news flow, still focused on increasing the resource, but now you're getting into the economics. Where really, I think a lot of people believe Mocoa should shine. It's got good grade, it's got a high-grade core, it's near infrastructure, it's got all these other compelling reasons, and here's a chance for it to shine and demonstrate. So there's a lot of value that will be created in a very short period of time for the project, and it's still, in my opinion, compared to peers, still undervalued. So it's got a lot of room to grow.
A few miners have told me that because of the way the metals have moved recently, they've expedited their timeline to development. Have you felt a similar incentive or pressure to do the same?
I think it's more like the access to capital. There's the capital available in order to accelerate. But of course, in a bull market, it rewards the first movers because that's why it's a cycle, right? No capital is available. You can't advance your project, right? I think the number of companies that are sitting here tells you that they want to access that capital. Next year, it could be 2 times more project. You go to the PDAC, it's 500. Next thing you know, it's 3,000 different companies are out there. But what happens is they hit the commodity. Because it goes with commodities, but it can take 20 years to build a mine. Those mines start getting built, price drops, and we repeat the cycle. So those that are rewarded are those who are building while the commodity price continues to increase. So yes, the smart people are accelerating their timelines to get closer to a production decision while the cycle continues to go up to capture that increased commodity price. It's something I've been saying for a lot of people, even 2 years ago, like, I'm new to this, I'm trying to figure it out. I said, just memorize everybody who's in this room because they survived a very difficult bear market. Because soon there's going to be so many names, it's going to be hard to tell the difference between who's who in the zoo. So you're starting with those that got through this.
Yeah.
Right? If you've been talking commodities since 2011,
sure.
Right? Now is your time to shine. I made a joke. It was, if you like the commodity, you want leverage, go to the Junior Explorer. If you really want leverage, go into the conferences and the letter writing space, right? Those guys are going to be, who've made it this far because they've been believers, right? Will be, hopefully your fan base increases dramatically, right?
Yeah, I mean, I've asked this question. Well, thank you. I appreciate that. So please do subscribe if you haven't already. I asked this question to a few people. I'm going to close off here. How do you, as a CEO, maintain leverage to the underlying metal? The number one reason a lot of people even look at the miners, they tell me, is because it's inherently a natural leverage to the underlying metal. So how do you ensure that the investor satisfies that mission?
Okay, so I'm going to start with a simplification in two different terms.
Yeah.
Copper Giant is worth about $100 million Canadian today, and it still went from 20 million to 100 million in a very short period of time, right? But it contains, and I think I'll get fined if I actually say this, but it contains 12.
Well, then don't say it.
I mean, 12 billion. People can do math, right?
Yeah.
It contains 12 billion pounds of copper.
Okay.
A copper equivalent. Multiply that by 6. What does that number come out to be? But it's definitely not 100 million. So it means that it's that future valuation, that future cash flow is being discounted based on how far I am to get into production and the risk to actually get there and the capital that needs to be raised, a bunch of different factors, right? So the best way that you can leverage and give that leverage to the price, right, is by accelerating your program and de-risking it, right? Because the closer I get to that 100 billion number, right, of course, there's a cash flow, there's cost to actually get there, but you get the idea. That is a big difference between your valuation and the potential valuation into the future. The second is maybe even easier, right? If you have a copper company and it costs $3 to make copper and you're selling it for $6, your profit is $3. If you go to $9, the commodity price only went up 50%, but my margin just doubled.
Yeah.
That is leverage. So even the leverage to your future production, that's why and it hasn't even been that way.
It's
There's
really
been
just a matter of
miners
keeping your all-in sustaining cost low if you're a producer.
that as a producer, but you're highly leveraged because even in the past it was copper was $3 and it cost $2.90 to produce it. Right. So your leverage and profit is huge.
Okay.
So as a CEO, for me, the increase in commodity price provides a clear increase in value to my shareholders, just leverage to the commodity. And the other way is to continue to de-risk the project to see that future valuation. Okay. So accelerating it, de-risking it, access to capital is cheaper, all these other things, but always think, I cannot go out there and just say the only thing that I have is I'm copper.
Yeah.
Right. I'm going to make you money because I'm copper. Right, because you have to continue to advance and make sure that these projects can continue to you're increasing value based on you're going to give me X amount of dollars and I'm going to increase your value. So it has to be a value proposition that can't just be I'm leveraged to commodity price. So it's really about accelerating the projects and de-risking the projects and taking advantage and I want to be producing copper when it's $8 and it's still going to 10. Not, you're going into production a year after it hit its peak.
Sure. All right, well, let's end it here. Give the audience a cliffhanger to look out for. We'll look forward to next time. What's the update that you want to give us in the next interview? Give us a teaser. Give us a timeline forecast for 2026.
So I think for the rest of the year, the next big step for us is by the end of the year, we're going to be doing our preliminary economic assessment. Sure. We're going to see elections in Colombia. We're going to see more news flow, but it's really this is a big change in the story from just a resource evaluation per pounds in the ground to actually understand and be able to talk about economics.
Yeah.
But I'm happy that even in a difficult time when it wasn't easy to raise capital, we've been able to deliver on the things we've been able to say. It's just the valuation is now reflecting that. So it's a whole lot easier to go from convincing to explaining.
Congrats again on a successful year and last couple months especially. So we'll follow up soon. And for now, follow Copper Giant. Links down below. Thank you again.
Thanks, David.